time for Lykken on Lending.
Welcome, everybody. Good to have you with us.
Welcome to Lykken on Lending, a weekly mortgage market update providing up-to-the-minute information on interest rates, loan programs, and hot industry news, all related to the mortgage industry. Brought to you by Transformational Mortgage Solutions. To participate in today's program, our guest call-in line is 646-716-4972. And now here's your host of Lykken on Lending, David Lykken.
Let's begin.
Happy Monday, Tax Day, April 15, 2019. Good to have you here with us. Everybody, this podcast is created by mortgage professionals. It is for mortgage professionals, and we're grateful to have you as our listener. Again, our commitment, as we say each week, is to bring you timely information in an audio format that you can listen to anytime and anywhere. We're glad to be a part of the Industry Syndicate, industrysyndicate.com. Check it out. And then also, we're getting the privilege to do some articles on Fox, so we're getting some feedback on those articles. I'm traveling so much, I don't get a chance to be on as much, so I'm grateful to have the opportunity to write for them. We're talking about millennials and the housing and market. Love to get any data points you have out there, and I'll give you a shout out when I write the article. Next week, I am excited to have with us Mike Fratantoni. I caught up with him at the tech conference, and I'm really looking forward to having Michael on. Again, he's the Chief Economist, Senior Vice President of Research and Industry Technology for the MBA, and we're going to be grateful to have him on. But today, we have in the Hot Topic segment, Gabe Minton, the Executive Vice President and Chief Information Officer, CIO at Guild Mortgage. And we're going to be talking about the latest developments in technology. Gabe has been a long-standing friend of mine and very instrumental in technology. Started Ms. Mo. She started one of our committees a long time ago. It's actually Eddie Cesario did, who's now at Freddie Mac. Then Gabe picked it up, and then it became Ms. Mo. Gabe was at the MBA and led that initiative. So he's got a lot of knowledge, great perspective on what's going on. We're having him help us sort out the various levels. Everything's getting lumped into the artificial intelligence category, and he's going to help us sort it out, stratify it. You're going to definitely want to stay tuned all the way through to the end of the podcast. He will not be live with us. We pre-recorded this late last week. I'm so excited to have him here with us by recording. You'll want to listen to it, as well as all the series we're doing on artificial intelligence. Very important. I want to say a special thank you to our sponsors, the Mortgage Bankers Association of America. Grateful to have the partnership. We're going to hear from Rob in just a minute, as well as Black Knight, the leading provider of integrated software and data analytics solutions, and Open Mortgage, a leading buyer of reverse mortgage loans, and the home of some of the top LOs in the country. Also, we're grateful to have Finastra back as an advertiser. They have their Fusion Mortgage Bot solution that automatically addresses compliance issues while delivering enhanced power and satisfaction, increased productivity, and greater amount of market share comes as a result of using their technology. Had an opportunity to interview at the ICBA, Eric with one of the banks in Iowa. Excited to have him on, have him share his journey. It's really made a difference in their company. Also, special thank you to Lenders One and the Mortgage Collaborative. Both of these are mortgage co-ops that create competitive advantages for both lenders and vendor members. It allows you to either one of these organizations. Some people belong both, but you're able to get to know industry leaders in an up-close and personal way. Then also Velma, an efficient mortgage marketing and email platform that we use. The word out on this. If you're not on the mailing list, please get a hold of us, send us your email, and we will make sure that you get the information. Also, Knowledge Scoop, providing easy and fun training for mortgage lenders. And then finally, Vidyard, an online video platform for businesses that allows them to increase leads and accelerate your message out to your pipeline as well as prospects. Then, of course, I want to say a special thank you to Alice, Andy, Alan, and Joe for their contributions to this podcast each and every week. Well, let's run out and get the MBA Mortgage Minute from Rob Van Raphorst. Rob, what you got?
Hi, I'm Rob Van Raphorst. Welcome to the Mortgage Minute and the latest news from the Mortgage Bankers Association. Last week, the House of Representatives passed H.R. 1957, the Taxpayer First Act of 2019. H.R. 1957 and its Senate companion, S928, is the first legislative reform to the Internal Revenue Service in nearly 2 decades. Among the many provisions, the bill includes language to automate the 4506T tax transcript process. Also last week, the House Financial Services Committee heard from Treasury Secretary Steve Mnuchin. Mnuchin faced a broad range of inquiries, including a focus on both the role of the FSOC and implementation of the FASB CECL accounting standard. Some committee members expressed concerns that the CECL could have drastic pro-cyclical repercussions on the GSEs and credit unions. And finally, mortgage rates inched back up last week, but remained substantially lower than they were in the second half of last year. However, this spring's lower borrowing costs, coupled with the strong job market, continue to push purchase application volume much higher. That's it for this week. Thanks for joining me.
Yeah, we were talking to Alice ahead of the just before we went live here, and she was saying how Union Home's doing real well. It's really good to see that the lower rates are helping all the lenders around our community here. So real grateful for the partnership with the MBA. Be sure to register for the upcoming MBA Secondary Marketing Conference. I'll be there, as well as others that are going to be people you want to meet there at the conference. But if you're going to be going, I'd love to connect with you while you're there. Also want to say, at these conferences, sure to download and use the LFI Shuffle business card. It's a tool that I use to connect with people. It's something I recommend you to check it out. Go to our website, at the upper right-hand corner, see where it says business card, digital business card, and be sure to download it, try it out. Look forward to sharing with you my card. Let's run over to listen to Les Parker with TM Spotlight and this week's macro view of the markets. Les?
TM Spotlight Soundbites is brought to you by Loan Logics and When Deals Die and When They're Gone. There'll be one more vote and a move to carry on. Well, the verdict is in on Brexit. It's a hung jury with one more vote to carry on to another vote until it dies naturally. The uncertainty constrains the UK economy and drags on the Eurozone broadly. No wonder the European Central Bank declares they will use any tool to lift growth. Whatever it takes becomes push any button and pull any lever, like the Wizard of Oz. The market is starting to ignore the tools of all central banks. Inflation is falling in advanced economies, and GDP signs point down. There'll be loose money for a world to carry on. These views are my own. Go to tmspotlight.com to subscribe to my daily newsletter.
Love that old song. Good job, Les. Appreciate that. Shout out to Gary as well for the work he does and they put into that. Appreciate that. Joe Farr is here. He and I are both mobile today. I'm in Austin. He's out by where I live in Marble Falls. Joe, good to have you here, friend.
Yeah, thank you.
So,
not much going on today, Dave.
Yeah,
the stock market's down just a little bit. I hadn't looked at the bond prices in the last half an hour or so, but they weren't doing much. Looking at last week, Rapport mentioned that mortgage rates had fallen last week, and I think he was probably using data that was collected in a survey early in the week. Later in the week, if you look at the week in total, MBS prices fell about 40 basis points, which means mortgage yields would have risen, 6 or 7 basis points. So mortgage rates actually rose in real time. Yeah, some of the cause of the rise, it's a little hard to pinpoint there because there was data going both ways, which kind of led to no change in the stock market. But, to cause rates to rise, some good things happened. Progress with the trade talks with China, growth in manufacturing in China was a big element. The Brexit deadline was extended, so the hard Brexit that was feared has been kicked down the road, and maybe something better will come from that. And then new job claims fell during the week, and they fell to the lowest level they've been since 1969. So that was a pretty favorable thing for the job market. Now, looking at the other side of things, which could have caused rates to improve, as was mentioned earlier, central bank policy, both the Fed minutes and then the actual ECB meeting announcements indicated that both are willing to provide more stimulus if needed. And anytime there's more stimulus, it's usually good for stocks and bonds. CPI fell to 2%. That's down from 2.1 the month before and 2.2 the month before that, so it's trending in the right direction. JOLTS indicated that job openings fell as well as new hires, which was a change in direction for that report. It is February data, so maybe we'll see a little bit of data in March. And then consumer sentiment fell in March. trade tensions grew with the EU. You know, we're picking fights with everyone. It seems like both the U.S. and the EU have threatened tariffs against each other. If one does it, the other will. And, you know, that could have a negative effect on stocks and oftentimes has a positive effect on bonds. And then looking at this week, Dave, there is just not a lot I can point to say, watch out. There's, you know, the only thing on the calendar really that I'd say pay attention to is retail sales number on Thursday. A nice rebound in March sales is expected from some very weak February sales. But other than that, you know, there could be further progress with the trade talks with China, but there's not a set event or an announcement day. More could come from the trade issues with the EU. Brexit shouldn't be much of an effect this week since it's been granted such a long extension. Other than retail sales, industrial production, home builders housing market index comes out tomorrow. And then on Friday, housing starts comes out. Like the retail sales, March is expected to show a nice increase over February activity. So, you know, it could be a pretty benign week for mortgage rates without too much to point to.
I appreciate you dialing in, and I know you have a busy day ahead of you. I appreciate you coming in today and dialing in and sharing us this update.
Absolutely.
Interesting. Brexit is like a tennis match. You just watch your head go back and forth. Is it on? Is it out? Is it on? So we'll see. But anyway, no, it should be a pretty benign week. But good. It's overall encouraging to see how the overall macro trend of interest rates has certainly been going in a better direction. So it'll be real fun to have you participate in next week's interview with our good friend, Mike Brentantoni. So appreciate you, friend. Have a great week. And talk to you soon.
Thanks, Dave. Bye-bye.
You bet. Here's Scott Gordon with Open Mortgage talking about the science of sales. Scott?
It's been ingrained in us since we were kids that every time someone says thank you, you're supposed to say you're welcome. It's expected. But what if I told you that your expected behavior is not building a bridge? One of the fundamental aspects of meaningful relationships is the understanding that you and your partner are in it together. So you help each other out with no need to expect gratitude for favors or services, because you expect them to do the same for you someday. Instead of saying you're welcome, simply say, hey, I know you do the same for me. This changes the dynamic of your relationship. It builds upon the science of reciprocity and implies that you now have the relationship where favors are freely exchanged. This is a minor change in your day-to-day communication, but the results could be huge. If it sounds too good to be true, it's not. It's just the science of sales.
That's good, Scott. Appreciate that. Love the science of sales segment. Get a lot of positive feedback on that. By the way, I forgot to tell you all at the beginning of the program. The other little text came out before. I forgot to tell all y'all. We have we're using the LinkedIn website for getting feedback from our customers. Getting some people. We had 2 more requests just come in while we were doing the podcast to join the Lykken on Lending LinkedIn page. So you're going to be sure, if you're not a member of it, be sure to connect with it. We are going to be using that for ways to get feedback and get more ideas for things that you guys want us to cover. One topic that always is welcomed is the weekly regulatory update with Alice Alvey. I guess legislative, regulatory, all rolled into one. Alice, good to have you here.
Thanks, Dave. Hi, everybody. Well, since it's tax day, I thought I'd talk about, this time of year is always a challenge from an underwriting and documentation standpoint for borrowers, right? Because this is the day, or I should say tomorrow, becomes the day where now we have to deal with they file an extension, and we really want that 2018 tax return, especially as you know, the borrower's income is always better in the most recent year, right?
We hope.
Right. So just a few reminders for everybody on how this works this time of year, where you're dealing with kind of the 3 things. Did they file an extension? Did they owe a lot of tax? And now I need to document, that they paid that. And, of course, you have to source those funds just like anything else. And then the third thing is the tax transcript. How does that work now? And I'm going to throw in a little bonus. So just a quick update for everybody, right, that you now have that I'm going to have to support that my borrower actually filed an extension, but keep and have that documentation in the loan file, and then still run a transcript. And since the return probably hasn't been reviewed by the IRS yet, you'll probably get a no record found, but that's still needed. So if the loan requires a transcript at your company, typically, then you're still going to have to get it for this year, but it's just going to be a validation that there's no record found. So check your company guidelines on exactly how they want you to handle it between, your pay stub borrowers and your P&L, whether or not you're going to need a P&L now. If they did say they filed an extension, and we're going to be getting into, more than 120 days into the year where we now need to verify income. The tax return from 2017 is getting a little old, so we're going to need some updated information to cover 2018. Then another real important date is June 15th. Keep in mind that the agencies need you to actually provide a tax transcript starting on that day. So you don't get to go all the way till the typical tax extensions till October, right, so for the super procrastinators and super excuses why they can't file till October. The agencies won't let you go that far. So for qualifying, we've got to get those returns in so that we can actually get a tax transcript after that June 15th mark. So keep that in mind. And then just as a side note for the tax law changes, remember that the agencies now, since we don't have a 2106 from the 2018 return format now, that they changed their auto allowance policies and the need to go back and count those expenses against the borrower for commission. So make sure you check your agency guides on that now that we're past April 15th. So that's my quick update for today, Dave. The little tax transcript and tax return reminder.
That's good. There's some great tips in there. Really important stuff. This new tax law, if you start thinking about it, it does have an impact on how things are reported and what we're going to be doing with it. Good stuff. Excellent. Really appreciate it. And,
You're welcome.
And it was good. And it's good to hear that Union Home is doing so well. We're thrilled to have you be here with us each and every week. So wish everyone up there our very best, and happy tax day to all y'all.
Thank you.
Talk to you soon. You bet. We're going to run over and listen to Nathan with Knowledge Coop give us an update on how you can improve and communicate effectively training. That wonderful topic. Some of the most exciting. Only Alice has the ability to make things so exciting. But if you're using the right technology like Knowledge Coop, it can help. That's without further ado. Nathan, what you got for us?
Hey, Nathan here from the Knowledge Coop. Are you a teacher or coach, either professionally or aspirationally? Then let me share these words from Ben Franklin as inspiration. Tell me and I forget, teach me and I may remember, but involve me and I learn. Benjamin Franklin's famous quote has since been proven by science and educators, and they now call it experiential learning, and it's sage advice for anyone in the mortgage industry. So do you have some training to do? Then check out the Knowledge Coop for fun and easy, video-based training for mortgage professionals out there, and it's all powered by a smart digital platform.
Yeah, check that out. It's really interesting how smart that platform is. It's very effective. And we're always talking more and more about videos. I'm working with a couple of people that do videos regularly, and I'm hoping to get them on. We're going to be doing a lot on technology. We're talking about chatbots and all of those tools. But we're going to also be really focusing on the importance of using videos. I'm coaching an executive right now on this, and he said, Dave, I'm having trouble. He's a warehouse lender, and he said I'm having trouble connecting with people, getting people to call me back. And I said, hey, text him a video with a personal message. He did, and he was blown away. He says, I can't believe the difference that has made. So just one little tip. He had to pay for the coaching to get that. You get it for free because you're a listener on the podcast. Another thing you get for free is Alan Pollock on a weekly tech update and all that's going on. Alan, good to have you with us.
Hey, thanks for letting me be here again.
Letting you? We love having you here.
I'm just kidding. So this is going to be a great conversation leading into the spotlight later. So here's what we're doing. We're going to talk about the odds of beating IBM Watson, eNodes, AI, and one real millennial. Are you ready? Let's do it.
All right. In 6 minutes, you fit all that in. Okay, go for it. Go for it.
We're going to do it. Golf Digest. You want to check this story out. First, we all know Tiger Woods collected his 5th green jacket this weekend, winning the Masters. He broke a tie with Arnold Palmer for the second most Master titles, and he's trailing just behind Jack Nicklaus with 6 victories in Augusta. So we'll see. I'm sure there's more to come with Tiger. And what's kind of funny is there's this article that says he beat the artificial intelligence of IBM Watson. And, the article, I'm just going to give you a couple quick points from it, but it says, this year for the first time, the Masters used enterprise-grade AI to capture every shot by all 89 players in the field. It's a 3-minute highlight video for the Masters.com almost instantly at the end of each round. This was all done in conjunction with IBM Watson.
That was amazing.
And,
I love that.
Yeah, and even more fascinating, the IBM Cloud stored and integrated data for every shot, measuring multiple items, the crowd roar, the player gestures, hand and arm and facial movements, you name it, create an overall excitement score. Tiger broke the computer model multiple times because the crowd roars were typically louder than everyone else, even other people combined. He had a perfect 1.0 score in many holes for crowd reaction. So
wow,
interesting what they're
interesting.
Yeah, we've talked in the past about artificial intelligence in sports. You want to check it out. It's a great article, and especially IBM Watson has become such a big name in a lot of the artificial intelligence and things out there, especially chatbots and conversational AI and so forth. I thought this was interesting. This is a different topic, David. This is eNotes. You know that the use of eNotes this year has skyrocketed nearly 5,000%. eNotes registered on the MERS system has increased substantially this first quarter, and they're saying a rise in the digital version of the promissory note. Here's the interesting stats, though. Last year, the eMERS registry only received 17,000 eNotes in the entire year. This year, in the first quarter, they received 19,000. And in the first quarter of last year, they only received 375. So there was over a 4,000% increase last year. And there's, of course, over a 5,000% increase this year. And as we've talked about in the past, eNotes and MERS is owned by the ICE. And we've talked about, hey, what could happen? What do you think they're doing with all that data? Well, I won't make any assumptions, but we'll keep you abreast of the situation as we hear more information. And then, David, I said in the beginning we're going to talk about AI. Well, this is kind of interesting. This is an article that I found online. It was at Think 2000. It's actually called IBM Think 2019. And it states, AI is not going to replace managers, but managers who use AI will replace the managers who do not. And I thought that was a great piece of feedback. They also said
that is
that
very interesting.
Yeah. It's a $16 trillion opportunity. Artificial intelligence will fundamentally change every business process, every role, and how organizations impact their industries. And so if you think about it, that was generic and specific to the world of, business, and they're just so right. I want to get back to what we talked about last week. Boston Consulting Group, if you remember, they put out this survey. They don't typically do a digital mortgage survey, and it was the first one. I read you the first two items. So if you remember, just a quick recap, they talked to a number of banks, service providers, and vendors, and they found 46 digital solution features falling into 8 categories. And I remember the first two I mentioned. One was saving for a home, and 2 is finding a home. So what we're saying is, hey, these are features that your borrowers, your new customers are interested in learning about. I'm going to read the other ones real quick, and then I'm going to talk about a real millennial I spoke to today. So number 3 in these features that they summed up is managing expectations. Features that guide and educate borrowers through the home purchase process are important, right? Understanding loan terms, answering questions, providing affordability, payment calculators. Number 4 is connecting customers, right? Finding ways to help people get that human connection. How do you give them the advice that they don't have? Number 5 was early commitment, clear and early communication with integrations to provide instant pre-approval letters. 7 was document management, of course, that process of integrating and helping to upload and obtain documents, acquire them. And 8th was support services, additional support post-closing. So really, if you think about everything that the Boston Consulting Group found across all those features, it all is relatable to the experience of the customer. Yes, eNotes and all these other things are ways that we're going to be able to stay in business and be better and more accurate, but the customer will always need to stay at the point of focus. And so, David, we're just under 6 minutes. I think we're going to make it just in time. And I mention that only because I'm going to continue to use some time here because you and I joke about this all the time. So in the last 15 seconds, I spoke to a millennial myself today. And what they said is they just bought a home. They said that they don't trust the computer. It always has issues. Internet is spotty. They get frustrated. The realtor mentioned someone that they trust is worthiness of speaking to them. They went to the person's office. They went digital on everything after they spoke with that trustworthy person, but they did go online to find the home. They did look at initial calculators, and they found that what the rate and price was online was different than what happened in the end, and they were frustrated as first-time home buyers. There was a difference of about $300-400. They didn't factor in some of the things that we need to educate them on, if you think about what Boston Consulting Group just said. Overall, they said that they would use chatbots and artificial intelligence if it was a personalized experience with their existing bank.
There you go.
So,
there you go.
There you go.
That's really important. It's the personalization. And I think the thing that I'm learning as I study this topic and spending a lot of time studying is how conversational it is getting. It's you have the chatbot and that are kind of can be rules-based, and you get all the way out to the AI world, and it's pretty interesting. Exciting stuff. Thanks. Appreciate you. Good job in getting that all fit in, too, in a timely manner. We're all listeners, and we're all trying to get this through so we get to the hot topic a little bit faster. We appreciate everyone's efforts to do that. So, Alan, you did an awesome job covering a lot of great material and did it well. Look forward to talking to you again soon. I appreciate you, friend.
Thank you. Talk to you.
Thank you. I love the Masters stuff. Andy, did you watch the Masters, or were you working on your taxes?
Hey, Dave.
Or both.
I was actually working on my taxes and working on my doctorate, but I saw the replay. It's pretty amazing. I wish I had watched it. I actually forgot about it.
I think we all cheer on comebacks, Andy. I mean, you and I both have had comebacks and in our careers, and we see clients having comebacks, and it's fun to be participating in helping those comebacks happen. So one person was asking, there was a comment that texted in. He says, "I'm not like Andy. I had to use someone else to use my taxes. I don't know how he does it." And so the question is, do you do your own taxes? I think you actually answered it. You were working on your own taxes. So
yeah, I do the taxes for the company, and I do the taxes for myself, both. So yeah,
wow.
TurboTax really makes it easy, and they give you resources as well. So for the most part, most small businesses, once you get a bunch of employees, you need to have a professional tax person, a tax CPA to help. And when you get really advanced, you might even need a tax lawyer as well. Especially, although CPAs can go to tax court, it's just good to, hire a professional when it gets to be more than, especially if you've got big payments and potentially big deductions. If there's any kind of question around the deductibility of an item and you push the limit, you really need to have a CPA on board with you to document it at the very least, and then be with you, because you're not going to find out if you're wrong for 2 or 3 years. So you need to have somebody who's got the resources to back it up, know what's right, know the gray area that you stepped into, and then be able to defend you in tax court. Because it's no big deal for the IRS to go to tax court. It's normal for them. But the place where they settle typically is you have to actually file the docket, and I've done this myself. You file the docket to appeal to tax court, and then all of a sudden the IRS will want to settle. Interesting.
Oh, that's interesting.
Yeah.
Interesting.
But you got to be able to get there. So you need a CPA to get you there if you ever have to. So aside from tax court, so today's tax day, be sure and file your taxes, pay your taxes. If you have any amount due, it's due today. Must be postmarked by this evening, so be sure and get it in the mail. You want to file an extension, you need to do that today as well. If you have a tax refund, there's no penalty for not filing the extension, but it's just cleaner to file, because that way it clicks off the flags in the IRS. Just go ahead and file the extension, even though you got a refund. It's just simpler. It's just easier to comply with their rules, and then they're less likely to have you show up as audit risk or audit flags kicking in.
Great point.
The 2 things I wanted to talk about left are, we've got the webinar continuing. So this week is hedge accounting, hedge reports, hedging journal entries, along with the distorting effect on the P&L, though. The reason that the P&L makes no sense, because we count the profit on locked loans. So when a loan is locked, we count the profit, and it makes the P&L make no sense. So we're going to talk about that. And then next week, we're going to talk about intangible asset valuation techniques to determine the fair value of the IRLC derivative asset. So that 5th session is really for CFOs. We're also talking about mortgage-backed security price adjustments and the impact on hedge positions. So that's kind of advanced. But some of this stuff the CEOs need to understand as well. the other thing I want to talk about was how to make money in mortgage lending. And how to make money in mortgage lending.
That's a good topic.
Yes, I'm going to be careful to point this out. So how to make money in mortgage lending. So first off, the one thing that people debate somewhat, but not really if you get deep into the weeds, is that success is not random. As a matter of fact, it's by design, and that's one of the taglines of my new company, Dr. Shell, the Profit Doctor, is success by design, profit by design. These things don't just happen. You just don't walk down the street and find $1 million bag of gold sitting on the corner. They happen because you make them happen. It's very much a purpose process, and that purpose process is really comprised of roughly 4 components, I'll just say, and that's plan, implement, measure, and adjust. And within those 4 areas are tons of detail, but I'm going to cover just a couple of them. So in planning, the first thing we're going to do is we're going to have some sort of a financial forecast, and there we're going to look at our volume, our expected gain on sale, the expenses we got to pay, the resulting cash flow. You got to have a plan, because if you shoot at nothing, you'll hit it every time. So we are going to have a plan of I've heard you say that before. So we're going to have a plan of where we're going to go and how we're going to get there. We then have to implement. So it's plan, implement. We have to implement, and implement is through employees. We can't do it all ourselves. But it's not just any employee. It's employees who fit our designed culture. So that means you have to have a design for your culture. You have to communicate. You have to get alignment from your employees of where you're going, how you're going to get there, and then you have to manage and lead step by step by step, and that's within implementation. Then as you're implementing, you also have to measure. So you have to look at your workflow activity. What's the definition of a complete 1003? That's one of the biggest sticking points of lenders is there's no definition of a 1003, and every originator does it differently, and it really mucks up the workflow when you get into processing because they don't really know who did what and what they should have done. So it's really important to deal with that along with a timeline that has step-by-step process of how it moves and how much time each step takes. Along with that, in addition to workflow assessment, is profit assessment. So we want profit per loan. You can't have profit per loan unless you have profit per loan accounting, and you got to have that set up where you capture every expense on every loan. So that's another thing you got to do, and that's all part of measurement. So now we've planned, we've implemented, we're measuring, and we're going to look at our results, look at what we thought we were going to get, and look at what we got, and we're going to adjust. So we're going to adjust to identify the results versus the plan. Did it work like we thought it was going to work? If it didn't work like we thought it was going to work, then we're going to adjust. It's a continual adjustment. It's not just you never set it and leave and go. It's always adjust. Implement the new plan. Adjust, implement, and then start all over again. So this is an iterative circle. Plan, implement, measure, adjust. It never stops. You're always adjusting. You're always planning. You're always addressing implementation. You're always measuring. You're always adjusting how things are done. And doing all of that will be success by design.
I like success by design. There's too many people out there doing it randomly. I mean, how many times have we heard it said, Andy, where they're out there and they're saying, well, what's your plan to turn your business around? We're hoping interest rates would fall. That's not a plan. That's a hope and a prayer and a poor one. I mean, you got to be intentional, and I think it's so important that people figure out how to have a plan. And it's a financial plan, it's a strategy, anything. So those that want to get a hold of you, involve you in their strategy, how can they get a hold of you, Andy?
Andy at mbs-team.com. I'm going to be spooling up my Dr. Shell website here shortly, but it's not running yet.
Oh,
but yeah, so
wait.
Dr. Shell, the Profit Doctor, where I've trademarked success by design, but also for now, Andy at mbs-team.com.
Very good. That works.
I'm going to hook up with you, Dave, to help you with my marketing. I'm going to get you to.
Oh, love it. Love it. People say, where do you get some of your marketing ideas? I listen to I Love Marketing podcast. It is so good. I listened to a whole bunch of episodes this weekend, and that's a great resource. But, Andy, anything I can do to help you in your success, I'm all about it. You do such a great job. You're such a great friend, and I appreciate you being here, friend. Have a blessed one.
Absolutely.
Great rest of the week. Let's go get some barbecue here soon.
Yeah, this week. I'm down.
All right. I'm around this week. We do it. There you go, folks. You're getting in on our barbecue planning here. Hey, I am excited. I'm excited about today's podcast. I've got a good friend of mine, Gabe Minton, who's on with us. He is EVP CIO at Guild Mortgage. He has had a number of really great positions throughout his career. He was SVP CIO at PHH Mortgage. He was Senior Vice President Information Services at ServiceLink. He was Chief Strategy Officer at Motivity Solutions. He was Chief Operating Officer at Mortgage Cadence. The list goes on, but most of all, he is just a great friend and someone that I recommend. One of the ones we should definitely say is he was Vice President of Industry Technology and EVP of MISMO. So there you go. Lots of great information in this man, and I invited him to come help sort through the whole broad topic of artificial intelligence. Folks, a lot of things are getting dumped into the general bucket of artificial intelligence, and that is something we asked Gabe to come on and sort out for us. So without further ado, listen to the podcast recording of Gabe Minton.
Folks, I'm excited to have with us on the broadcast today a very good friend, someone I've known for many, many years, and certainly is not someone that needs much of an introduction. He's so well known to our industry, has served our industry in so many capacities. I'm talking about Gabe Minton, who's currently with Guild Mortgage. Good to have you here, friend.
Hey, good to be here, David. I'm so glad to be able to talk to you today.
Well, you are one of the listeners that have been early on listening to our podcast. You are a faithful listener. I appreciate that you still are. Gabe, for those, I can't imagine people don't know you, but for those that don't, give us a little of your background and how you got into mortgage lending. Was it on purpose? Was it accidental? And a little bit of your journey.
Yeah, I'd be happy to do that. I have been in the industry for about, over 25 years now, and I started with a .com where our paths originally crossed back in the 90s. We built a online whole loan trading platform as well as a high loan to value loan origination system, which hadn't been created yet. And that would be the first of 6 major loan origination systems that I've built and or maintained over the span of my career. And so I started kind of in the software product space, and then I went to the Mortgage Bankers Association and worked for Doug Duncan and built out the MISMO organization and really focused on industry standards for the mortgage industry for a number of years. And then went back into private industry and ultimately to lending shops working and running their technology groups. So most recently, over the last 8 or so years, I've been working with PHH Mortgage as their CIO, and currently I'm the CIO at Guild Mortgage.
Well, good job in covering a lot, 25 years in a short period of time, yeah. And I want to give out a shout to David Matthews, who you and I both work for. He's a veteran in this industry, and it's good to see him in Dallas at the tech conference. And that's where you and I really reconnected. And there was so much being talked about, and the broad sense of what's being used and misused is artificial intelligence. If you want to get someone to come to a session, just throw artificial intelligence in front of it. It seems like everyone wants to race off to those sessions. And when you, David, and I went out to dinner, I started asking you some questions about this, and you started really bringing some clarity to what is AI versus robotics as well as machine learning and just rules-based decisioning. So that's where I want to go. And then there's the last topic I want to get to, something that you're very excited about. We'll save that to the end. But let's help our listeners sort through what are the various categories in this broad misused term of artificial intelligence.
Sure. Happy to talk about that. First, the first and most important thing is that these technologies, in particular artificial intelligence, has been around a long time. So artificial intelligence is a known, practiced field within computer science and software engineering, has been around for decades already. So it's not necessarily a new topic, okay? What's really new, and what we talked about at dinner, the game changer that I feel is out there with regard to artificial intelligence, but not only that, these other technologies that in my mind, and I'll describe this more in a second, sit kind of in front of artificial intelligence, such as robotics process automation, and machine learning. These technologies are so much more accessible now. So it used to be 20 years ago, you could have a PhD that you hired out of MIT, and you'd have to pay that salary, and they knew neural networks technologies, and they programmed in Prolog. I've actually written and done neural networks in Prolog, and that was many years ago. And you can do these types of things, but you would have to staff that and then hire people, and then you'd need a supercomputer. Where would you get that, to be able to run your programs and really have a good learning that happened across a large data set? But now with these cloud accessible platforms such as Watson, which is IBM, and Google Cloud AI, you can just have an internet connection and you have the processing power of a supercomputer, and you can pay that on a per drink or on a subscription basis, and you can point that at your data set, which you can also put up in the cloud, and you don't need a super-sized computer to store all of the information that you're trying to train off of. And this has created an accessibility in our industry that has just been, and across all industries. It's not just mortgage here. It's across all industries, and with that accessibility creates a lot more opportunity for a lot more people to do innovation. And I think that's really where the game changing is going to occur and is occurring.
Yeah, it's good to point that out. Let's talk about machine learning, RPA, and AI. And then in the front end, the very, very front end, I guess, is rules-based, but that's a rules-based. That's really not something where anything is learning. It's just how would you stack those up? Is rules-based the most basic, fundamental, such as AI chat or chat bots and those types of things that we see on websites?
Yes, I would say that rules-based systems has been around a long time. There are a couple of them specific to mortgage that have been implemented there, like iLog and Mindbox. And if you go to automated underwriting systems, they started as rules-based engines. And what a rules-based engine does is it's an off-the-shelf platform that you can use to program your business rule logic in kind of a pseudo language and put it into the rules engine, and then it executes those rules and connects to your other systems through APIs, as opposed to you having to write in C++ and Java code and write all this programming logic to do the rules yourself in code. Okay. Although you can do that, and many people do. So, you write an LOS from scratch, then you might embed a rules engine, or you might write it all in code, but it requires different resources. And the theory is you can use more BA-type resources, business analysis resources, to be able to do the logic in a rules-based engine because they don't need to be programmers and know that language. But if you put that one in the front of that whole thought process, then soon after that, you might take the rules and then you automate through a scripting process. You automate the firing of the rules, and that could include inputting information through macros, if you will, on screens, which a human does. And it could then input information, get a result back, then fire 3 rules, then go to a different screen, input information, get a result back, fire 4 rules, come to a conclusion based on an if-then-else statement, which is really important. It's a rule. Right. And then it does the work for you. And that's where I think there's really game-changing innovation happening in mortgage today. And that's in RPA, robotics process automation. And again, you have that cloud accessibility. We're piloting this at Guild. Companies such as Fannie Mae have been 2 years into it, and they're seeing great ROIs off of it. And you have, Blue Prism, and you have Softmotive, these companies that are out there that you can just attach to through the cloud to be able to set these bots up and run them on a very accessible kind of subscription basis.
Where does machine learning fit into all of this?
That is a great question, and that's what comes sort of next in the stack as I describe it, or as I think about it, which is, okay, now you have the bot running. Now, what can the bot do about what it's doing? How could it learn from the steps? So the way I think about it is, let's say we get really into RPA and we set up 25 bots that are doing these 25 processes automatically. And the average number of steps that each bot is taking is between 100 steps and 1,000 steps. Okay, so you have all these steps depending on which script, if you will, or which program is running, and this bot's running, and this bot's running, and all these 25 bots are running, and they're running over time. So they fire the 100 steps 100 times a day for 100 days. And they fire the 1,000 steps 100 times a day for 100 days. And now this starts to build up a huge amount of data information, timing around all those steps, failures, where did they occur, how did they occur, how many times did you have to rerun it. All of that starts building into a data repository, and that data repository could feed a machine learning algorithm so that the bot could recommend, or the machine learning program could recommend a better way of running the 1,000 steps or the 100 steps. So let's say steps 1 through 10 could be done only as step 7. And steps 11 through 20 could be done in 3 steps. And so now that's eliminating steps, and it could reorganize the steps, and it could create a report that self-optimized the execution of what it was trying to do. And that's kind of where machine learning is. And then where in my head, the artificial intelligence now, that takes that a step further. And now there's a self-learning aspect that you add on top of all of what we've talked about. So now not only do I have the data, not only do I have the steps, not only can I perform the process, not only do I have all the business rules that started all of this, but now I can start to learn myself from not something you told me to look at or you asked me to evaluate. I'm actually teaching myself something new, so that a new process comes out of an artificial intelligence. And that process is not even the same steps that you were doing, but it accomplishes the same means to an end. And it comes out from an artificial intelligence. So a good example, Watson, is IBM's cloud artificial intelligence, and you can access it. It's very accessible, and they've done amazing things with identifying cures to various cancers that doctors hadn't identified before. And the reason why they can do that is because they look at so much data across so many participants, and they self-teach about how they can solve the problem of cancer without, going to school and without following a methodology that had already been established. And while I believe there is a huge opportunity for this in mortgage, I don't believe that the opportunity is going to be fully realized, say, in the next year. I think this one is going to take a little bit more time to play out.
So at this point, we're seeing a lot of rules-based decisioning, have been for some time. We've seen some RPA, robotic programming, actually going on, applications. If you were to take a look at a progression and draw us a picture in our minds, if you would, Gabe, rules-based is really developed. RPA is fairly fully developed. Machine learning is coming into its own, and AI is the future. Is that an accurate way of looking at this?
Yeah, the only thing I would tweak to what you said is I think it's fair to say to all of the artificial intelligence PhDs that are listening to your podcast, it's very well developed artificial intelligence.
Right.
It's the application.
It's the application of that's what I meant.
To mortgage that I think is still needs some development time and work. Whereas RPA is also very well developed, but it's simple for us at Guild Mortgage or at any other company or your company. You can sit down and say, all right, give me the 20 steps. And you're looking at it on the whiteboard in the swim lanes, or you were talking about mind maps earlier. So you lay it out and you're like, oh my goodness, we could do this so much better. Or you can apply like Lean 6 and you're like eliminating wasteful steps and stuff. And you follow that process and then you put that into a bot so that it executes the process in attended or unattended mode. And then now you can do that a lot faster because it's just going to do those steps for you at the press of a button to do the 100 steps instead of a human being having to perform all of the steps.
We're looking at a lot of need to reduce costs in mortgage lending. You're familiar with that, and you're doing significant initiatives. You have a number of significant initiatives underway there at Guild to cut costs. We have other clients that are doing that. It really starts with understanding and having a consistent process. I should say, ask that as a question. I'm almost asking as a rhetorical statement. Would you agree with that? It's essential that you have a consistent process throughout your organization?
Yeah, I've been a big believer, as you know, through my work with MISMO and other standards bodies, that following standards is key to success. And you have to apply those across people, process, and technology. It's not just technology that's going to solve the problem. The people have to be willing to use the technology, and they have to be willing to follow a process. And the process has to be standardized, because if I go do the 20 steps and every business person I talk to that does this process does 30 steps over here and they're different, and 20 steps over here and they're different, and 17 steps over here and they're different, and you have no standardized way to do it, then which one are you going to follow for putting into the bot? And so you have to kind of standardize it. And once you create that standard, that also allows you to hire people or reallocate people a lot more easily too, because it's a standardized, known, documented way of execution, and everybody does it the same way. And they might tweak and tune a couple of things on their own. They're a star performer and they think about things a little bit differently, but by and large, the overarching process is done the same way. And that just gives you a lot more portability as an organization in your ultimate quest to be able to reduce the expenditures.
We're seeing a lot of outsourcing. One way to reduce costs is offshore and outsource, and we're seeing that being one way to do it. However, artificial intelligence has a much more effective and efficient way of reducing costs, and it keeps those processes inside of onshore and inside a computer. Do you see the two, outsourcing, offsourcing, and robotics and AI, machine learning, all this aiding and coming together, or how much are we going to be needing to outsource as we see AI developing?
Well, I think there's two parts of the answer to that question, and I would speak more to RPA and outsourcing of rote processes, which we've been doing for a number of years now. The outsourcing of AI, again, until that application problem is solved, I haven't seen a lot of outsourcing of artificial intelligence yet, because we don't have a lot of artificial intelligence insourced yet. So if I focus a second on the RPA, yeah, you can outsource. So from a macro perspective, the answer to your question is, well, if the bots are doing more of the work, then human beings are doing less work if you're successful in that. So if the human beings are doing less work, then that would mean those human beings that were outsourced before, from a BPO perspective or inside your shop, goes down. However, there is exceptions to every rule. So the bots will fail, the process won't work, there will be a flaw, there will be an error, and so you still have to have a robust exception handling process that runs around the bot to make sure that you keep all of your business moving forward in an unmitigated fashion. And so for that, outsourced providers have wised up to that, and they've already started pitching solutions where they're like, we'll come in, we'll build bots, you can use our bots on a subscription basis or what have you, and we'll provide the BPO resources that if there's an exception, our person will handle that one exception and get that one over the finish line, and we'll handle all of that and do this on this SLA and then give you a report out from this process of how it's running, et cetera, et cetera. So, and it's up to the business to decide, okay, do they want to follow that? They're putting together competitive solutions there, kind of melding the two technologies, the technology with the people, or they can be like, no, we'll have you build the bot, or we'll build it ourselves, and then we'll run the bot, and then we will handle the exception processing, and we'll do that with our internal resources.
Good point. Trying to understand where this is going. I think the part that's probably most concerning to me as I consult to the industry and have been for the last 17 years is a lack of consistency in process, a lack of attention to that. And I really think it's important for our listeners to hear, if you're not focusing on your process, that's the beginning. Before you put any of this in place, you've got to start there. And if you're not going there, I really do get concerned that you're going to be left behind and possibly put out of business because others that are initiating this, Guild Mortgage, other companies that are out there, Radius Financial, my good friend Keith Pulaski at Radius Financial, there are companies initiating this, folks. One of the things that I heard Elon Musk say, that he sees AI as being very scary. He has been very vocal against AI. Is this something we need to be concerned about inside of mortgage lending?
It all comes down to the application of AI, right? So where are you going to give the decision to a machine? Because at the end of the day, a business and ultimately a person needs to represent that business and answer in a court of law if a lawsuit is brought against a company. Right. So there are a couple of examples that are out there that are publicly known where a company handed an AI a decision, like a hiring decision, and then it came out later that over looking at the data that the hiring decision was more prevalent to one gender than another, and it was the AI that was making the decision. Well, the AI didn't go to the court and answer to the judge about the bad decision that was being made. A person representing the company that ran the AI did. And so you have to be careful, and I think that's where Elon is going as well, is you have to be careful what do you hand off to the machine to make a decision and teach itself and be able to make its own decision based on its own learning. How much latitude do you provide? And I think that if you build off of some of the concepts we've talked about today, where you're applying artificial intelligence on process optimization, but you're not like making a suitability decision or some other decision that has legal ramification to how it's being made, I think that that's where you can be a lot safer in the application of artificial intelligence.
Great point. We could talk about this topic forever, but there's a book that you referred me to that really fits in with this topic. It's called The Trust Economy. I'm very excited about this book. I've been devouring it since you recommended it a week ago, and I want to get into talking about why you are so excited about this book. And I want to start off with this analogy. My brother, who had a VC firm up in the Seattle area, invested in a avatar company, which had some intelligence behind it. Now, it was way before, it was 2008, so it was a number of years ago. But what was interesting, they were running a test on trust. Will people trust these machines? Will people trust the results of what we've just been talking about, the broad topic of AI and all these things? And what was shocked to him and many is that I think it was 85% of millennials would trust a computer more than they would the human that would basically provide the same information. It was a very interesting thing. So the trust economy and this topic actually fit pretty nicely together. But talk about that book and why you're so excited about it.
Yeah, so that book, I do recommend it. It's written by a gentleman who spoke at one of our leadership summits at Guild Mortgage. And what it's trying to address is, to your point, how much trust consumers are putting into what I call middlemen or arbiters that are new platforms that didn't exist before that you have to trust to be able to perform a function or do a transaction. So the examples that he provides and drills in on are Airbnb and Uber. Okay, so these are definitely game-changing technology platforms and game-changing ways that we do business, and there's a lot of trust that we have in them. So I use the Airbnb. I'm going to a stranger's house, hopefully not with webcams in it, which is being written about more because they're watching their house, but are they watching you? So that affects that trust equation. Right. But you're going to somebody that you don't know, and you're giving them money, and you're staying in their place, and they're trusting you. You're not going to go dump their house and start a fire and everything else. And we're doing it all through this third-party platform that basically creates the connection. And so you have peer reviews as a very important trust factor on all these sites, from Amazon to Uber to Airbnb. You have your 5-star ratings, and did they get good reviews? And so if everyone gave them good reviews, then I should be able to trust them. And so he delves into that a lot in this book. So if you're really forward thinking out there, like your brother and you have always been, where you're thinking about what's the next thing and how do we build that. I was interested in applying it to the mortgage process. So if we're doing mobile apps to our consumers and we're doing an experience, we want the experience to be thoughtful and memorable for the consumer, but we also want them to build trust in Guild Mortgage, not lose trust. So he builds that in the centerpiece of the book is his 6 steps trust model, which talks about 3 steps: proactive, perception, temptation, and connection, and then the reactive 3 steps, which is validation, attachment, and affiliation. And he walks those through and provides many, many examples of how you can think about applying those principles and that model to what you're doing from an application and platform perspective, and what you're trying to provide to your customer, so that, or your trading partner for that matter, so that they can build trust in this third-party application that they're accessing you through, which is, a portal or a platform.
Very interesting. What are some of the principles to build trust in a digital world?
Well, you have to have, at least eventually, you have to have great brand recognition. You can build a lot of trust with brand. If you're a new brand and you're a startup company, then that's hard, so you have to go build that, and you do that through speeches and seminars, just like we did back at the startup we worked at. You have to build that from scratch. But once you have that, that becomes really important, that the consumer sees your brand as something that they can trust or not. You do that through transparency. That transparency can happen through visibility of data and process and steps that are firing behind the scenes, some level of that, so that there is a transparency to the process, to the person that asked you to perform it for them. And, that visibility to being able to see if there's a problem, where did it occur, how did it occur, who's accountable for it, and you work that all through as you're communicating with the customer as well. And those are a few things that you can do to build that trust and that character in your company and in the services that you provide. I mean, in your service, you build trust with people you've consulted, and people trust that you're going to come in and you're going to do the right thing. And if you're going to move there, you do a lot of personal connection, and you're very good at that. If you're going to move off of that and you're going to use a third-party portal to do that connection, then you have to make sure that the brand of your company and you flow through that, and that they have the tools and the technologies to be able to see what it is you're providing or what it is that you're pitching. So I see the same problem needing to be solved from a consultant lens, just like a lender lens. It's all moving digital,
That's so true.
And it all needs to be trustworthy and accountable.
And I think reviews that you're published, so that's one of the things I'm excited about that we're doing more and more is, when you get testimonials, when you get people talking about it, I think it does build trust. There's an old proverb that says, let another man's mouth praise you, not that of your own. I think the less we talk about ourselves and try to tell everybody, why they should trust us, you just let someone else do that job for you. And that's what Uber and Airbnb do. They have all the reviews. I use Airbnb, Uber constantly, and Lyft. These new platforms, I'd look at these reviews, especially when you see some of the things and the issues that have developed. Some sad, tragic, recent issues related to Uber, someone getting in the wrong car. How do we do these things? So I think it's so important that we take some of the lessons learned, bring it to what we're doing here in the world of mortgage lending, especially as we start using this technology, again, broadly used as artificial intelligence, bringing this new communication technology, connection technology to the front end of the business, not just now. We've been using it in underwriting, been using it in decisioning, and those complicated areas. We're now bringing it to the front end of the process and using that to engage consumers and communicate with consumers. And it's so important that as we do that, we build that trust. So it's very exciting that you called my attention to that book, and I want to call our listeners' attention to this. What are some of the things that you can talk about that are exciting, that people are saying, man, I want to learn more about Guild Mortgage. Sounds like they got a lot of good things going on there. So what are some of the things that are going on there that should get people excited and possibly seek a career and make a move over to Guild?
Sure. Thank you. It's an excellent company. It's phenomenal. We're doing a lot of great things and innovating in a lot of ways. So if we apply that to kind of some of the things that we've talked about here, obviously we're building out our trust model. We're building out our brand, just to what we were just talking about. And we're providing better service with more transparency to our consumers and our trading partners. And so we've put out a mobile app recently that I know you're aware of that the agent community uses, and so that allows our realtors to have more transparency and build trust with our loan officers whom they're interacting with. With regard to artificial intelligence, a couple of areas that are more developed as opposed to these like decisioning systems that we were talking about earlier, but like document recognition and training and learning and deep learning around document recognition and document typing. This has been around the industry since the industry existed, and there is definitely great advancements that have happened with that part of artificial intelligence and machine learning, and we're tapping into that at Guild also. And, we're doing natural language processing, so we've looked at voice enablement technologies like Alexa and Siri platforms and what we can do with that so that our consumers and our trading partners or our agents, our partners can talk to us and ask us information, and our machine will come up with the answer and then project the answer through Alexa, for instance. So we built a prototype last year on that. And natural language processing, of course, has been another area that's been advancing with artificial intelligence because everybody's voice is different, everybody's pitch inflections are different. So that learning of how to process a sentence or a phrase and turn it into the right question to a computer so it answers it correctly is definitely an area that's advancing as well. And so we're trying to stay in front of all of that and run alongside it at least to be able to keep our technology platform advancing. We're super supportive of our sales force, our people, our employees, and our people love working at our company, so we're always looking for great people to add, whether it's in our sales division, servicing division, or in our IT division. And thank you for letting me talk about that a little bit.
Well, it is exciting, and I gained a great deal of respect for Marianne and the whole team there when we were together at the Leadership Institute in Gettysburg. We went through that together, and they had a large group, and I was in the background watching them, and I gained so much respect for them and that management team and how they interacted and the energy that was there. And then what really got my attention is when they recruited you, which you still live out east and you commute there every week. That really got my attention. So, folks, I'm telling you, pay attention to what's going on at Guild Mortgage. It's a very exciting story on many levels, how the company was acquired, how they did the leverage ESOP. There's just so much about this story that's very exciting. And now that Gabe's there, watch what they're going to be doing when it comes to technology. It's one of the leaders that we should be all focused on, paying attention. For someone that wants to go to work or learn more about Guild, what's the best place for them to connect? I'm assuming your website and then any other resources, your email, someone else's email. How can people get in touch with your company?
Sure. Our website is probably a great place to start, which is guildmortgage.com. We're also active in the various social media outlets, including LinkedIn, Instagram, Facebook, and I certainly can be reached, and you and I correspond on LinkedIn. If you want to reach out to me, that's certainly an area that you can reach out to me directly as well.
Good. So it's Gabe, Gabe, Minton, Minton, and LinkedIn. Search him out, get a hold of him. Gabe, thanks so much for taking time out of your extremely busy day to join us and give us a little more insight that helps sort this out a little bit more. There's so much here. Love to stay in touch with you, have you continue to contribute to our listeners' learning and all of this. Thanks so much, friend.
Awesome. Thank you so much for having me, and I'm glad that I could help, and hopefully this helps your listeners as well, because I definitely like trying to help explain things and continue to focus on problem solving in our industry. So thanks for having me.
It was great having Gabe. Go back and listen to this podcast as well as all the other hot topic podcasts that we have up there on our website. Go to LykkenOnLending.com, and under podcasts, you'll see the various segments. I want to say a special thank you to our sponsors. Acknowledge them, the MBA, Black Knight, our two co-ops, both Lenders One and the Mortgage Collaborative, as well as Open Mortgage, as well as Finastra, as well as Vidyard and Knowledge Coop. Grateful to all of our sponsors that make this possible, and most of all, grateful for you, our listeners, that show interest in our initiatives, what we're doing here. We welcome your feedback. Go over again to the LinkedIn page of Lykken on Lending and drop your thoughts there. Send me a text. Love hearing from our listeners, and I do hear from so many of you, and mostly through LinkedIn. It's a great way to do it. I'm hearing probably 2/3 of my communications, professional communications, come through LinkedIn right now. It's really amazing how that is picking up as a viable way. Gabe mentioned it, so I mentioned it to you. It's a great way to connect with me. Or if you text me at 512-632-2900. Again, thank you so much for being a listener. Be sure to tune in next week where we have Mike Frentantoni, who will be here with us talking about the markets and the latest MBA economic forecast. Have a great week, everybody. I'll see you next week.
You've been listening to Lykken on Lending, a weekly mortgage market update with your host David Lykken of Transformational Mortgage Solutions. Join us next week, and thanks for listening.